Hello everyone, PS from PS Invest Plays here today. In 2020 and early 2021, Fiverr stock had risen more than 1400%, but since then it has shed 52%, whereas S&P 500 has risen 25%. Many analysts think that it is overvalued. Is this true? Or can we expect higher stock price in 2021 and beyond? In this video, we will understand its business, its financials, its future growth outlook, and review its chart using Elliott Wave to see how we can make money. So, stick around. I think you'll like what I have in store for you today. Fiverr, ticker FVRR. Fiverr is an Israeli online marketplace for freelance services. The company provides a platform for freelancers to offer services to customers worldwide. Fiverr serves to allow listing and applying for small one-off jobs or gigs online. I had covered Fiverr a couple of months ago, and you can watch my video by clicking on the link in the top right corner. In the previous video, I had covered why Fiverr is a dominant force in the gig space and why it is poised for secular growth for the next decade. I continue to believe in the growth story, and I will explain why. The primary reason that Fiverr has underperformed the market is a sort of a live by the sword and die by the sword phenomenon. The recent fortunes of Fiverr were largely propelled upwards by the 2020 shutting down the workplace, forcing people to work from home, while at the same time making full-time work harder to find, thus accelerating the attraction to freelancing. Over the last 1.5 to 2 years, Fiverr has effectively doubled its active buyer base, tripled its revenue base, and achieved a nearly 30% positive swing in EBITDA margin, as 2020 had the effect of accelerating changes in how work is accomplished by pulling forward growth in the online freelancing market by a year or two. Over the course of 2021, however, with the introduction of vaccines, the sentiment of investors has changed towards Fiverr. The world is now in the process of shifting towards a post-2020 period where businesses are reopening physical locations, more full-time work is becoming available, and it has become easier for job seekers to find suitable long-term employment, which has been having the effect of slowing growth for Fiverr's online freelance marketplace. The slowing growth can be seen in the deceleration in Fiverr's Q2 revenue growth numbers and in disappointing guidance. In the Q2 earnings call for Fiverr, both the company's Q3 and full fiscal year 2021 guidance came in below analysts' expectations, which caused the stock to slump after earnings. The combination of slowing growth in Fiverr's freelance marketplace as the 2020 fueled growth is now slowly getting digested after the enormous pulled forward gains, and the fact that Fiverr sold at relatively high valuations has served to temper enthusiasm for the stock recently and has brought the stock down from its all-time highs of $336 in mid-February to its current price. While growth might be slowing down a bit for Fiverr in the short term, in the long term, growth opportunities for the company appear to be still very strong and sustainable. Fiverr has a number of factors that make me still consider Fiverr a long-term buy. These factors include large market opportunity with low online penetration. The addressable market for Fiverr among the full estimated $815 billion opportunity in freelancing is estimated to be $115 billion in the US alone. And this addressable number only includes digital services freelancers, while excluding gig workers that work for outfits like Lyft or Uber or DoorDash. Fiverr has also estimated from its studies that the European addressable market as a whole is about 1.5 times larger than the US. In addition, the percentage of the $115 billion addressable market that still engages in offline freelancing is approximately 95%, which vastly exceeds the percentage of those engaging in online freelancing. However, over time, the percentage of freelancers finding opportunities online will likely expand rapidly. Multiple levers to drive long-term growth. The embrace of remote work and the freelancing trend is certainly not in the process of reversing itself. And Fiverr has multiple avenues to drive growth in the online freelancing market moving forward. Fiverr is constantly innovating and developing newer services to both bring in new buyers and move upmarket in order to allow large businesses to engage with the platform. One of Fiverr's more recent services is subscription services, where freelancers have the option to offer their service on a subscription basis, and Fiverr Business, which is a high-end freelance platform that was designed specifically for larger teams and businesses. Fiverr also considers expanding the gig catalog as a key lever for Fiverr's growth moving forward. Last but not least, Fiverr has strong international expansion plans, which it considers a key growth strategy. Recently, the company has really been focusing on the European market, as Europe has been identified as a market for freelancers that is even larger than the US. Fiverr followed up the European expansion last year with expansion into Latin America, beginning with Brazil and Mexico. Fiverr now offers buyers and sellers in both countries the ability to use local payment solutions and the ability to communicate and interact in their native language. Moat consisting of two-sided market with network effects. In Fiverr's two-sided market with network effects, the value that consumers from both sides of the market gain is derived from the tremendous flywheel effect that occurs as new users join both sides of the platform. As each side of the marketplace grows, it fuels the growth of the other side of the marketplace. As any two-sided marketplace grows, it can become a powerful competitive advantage and eventually become a network effect moat, which is one of the most powerful moats that a business can form. High quality, powerful business model. The beauty of Fiverr's business model is that a majority of the company's revenues comes from repeat buyers, and majority of new buyers come from organic channels, meaning that no huge sales force is necessary to produce stellar results. The marketing that Fiverr does engage in comes from a highly sophisticated SEO and SEM engine that the company considers to be a key competitive advantage against both competitors and the freelancing activity that takes place offline. Fiverr's marketing efficiency has been only increasing over time, and this efficiency allows the company to remain disciplined in its spending on marketing. Currently, Fiverr gets a return on its performance marketing investments in roughly 3 months. Another attribute that I like about Fiverr's business is the company has a take rate that is above its competitors and is considered pretty high for the type of marketplace Fiverr has. In a sign of the massive value that the company has been creating for its customers, Fiverr has not received pushback on its take rates from the clients it serves. A strong take rate is also a measure of the strength of the underlying marketplace in comparison to a competitor's offerings. If an investor takes their cues from Fiverr's take rate, then Fiverr can be considered an extremely powerful competitor in the online freelancer marketplace. In the latest quarter report, Fiverr reported that the take rate grew from 27.2% to 27.8%. Fiverr plans to expand the take rate even further over time by providing more value-add services. Strong growth and operating leverage. Fiverr is a business that has produced strong and consistent revenue growth in the past. In Q2 2021, Fiverr produced $75.3 million in revenue, up 60% year over year. This revenue number was driven by 43% growth in active buyers, 23% growth on spend per buyer, and by an 80 basis points expansion on take rate. Fiverr's revenue growth also comes with increased cost efficiency, which shows up as operating leverage. The sales and marketing costs have come down from 62% to 45%. It is largely the drop in marketing spend with some help from the drop in R&D spend that is responsible for a now positive adjusted EBITDA margin. In Q3 2021, Fiverr's sales jumped 42% higher year over year to $74.3 million. On the bottom line, adjusted earnings increased from 13 cents to 19 cents per diluted share. The third quarter results also exceeded the top ends of Fiverr's guidance ranges across the board. Furthermore, management issued bullish guidance for the end of the year. Fourth quarter sales were targeted at approximately $76 million, high above the current consensus analyst estimate near $72.8 million. The underlying business metrics were equally impressive. Fiverr had 4.1 million active freelancer hiring buyers by the end of the quarter, representing a 33% increase from the year ago period. The average spend per buyer also rose by 20%. It's difficult to pull off strong double-digit growth in both of these categories at the same time. And this combo shows that Fiverr can raise its fees without scaring off potential customers. Looking at the financials for Fiverr, revenue, gross profit, EBITDA, net income, EPS or earnings per share are extremely good. Even when you compare 2021 financials against 2019 financials and discount 2020 financials, they have increased by a very good clip. In the chart on the right, free cash flow FCF currently stands at 85 cents per share. Recently, with the stock price decline, price to FCF ratio is declining. Even though looking at Q2 2021 earnings report and management guidance, it was thought that Fiverr's growth has slowed down due to the anticipation of things returning to normal as the 2020 slowly winds down. Fiverr has a very long-term growth runway in the online freelancing opportunity. It is currently running an ambitious marketing campaign across several important markets, including the US, UK, Germany, and Australia. Beyond that growth promoting push, its management hopes to build a full-featured ecosystem for freelancers and their customers. It is clear that Fiverr is in the early stages of exploring a massive market opportunity, and the business remains strong even as the world starts to overcome 2020. The gig economy is here to stay, and Fiverr just demonstrated in its most recent quarter once again how the company is a leader in this emerging sector. Therefore, I would recommend that you should consider the current price and any further pullbacks as an opportunity to add exposure. This is also indicated in the charts where I see the stock price to increase considerably in the next 4 to 5 years. Now, let's take a look at the charts for Fiverr. Sorry for the interruption, but I wanted to take a moment to remind you that if you like this video, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. With that said, let's get back to our analysis. Looking at the chart for Fiverr, the bull run that started in 2020 is still not over. It has completed its first two waves. Wave 1, which was the bull wave, and wave 2, which was the corrective wave. Now, Fiverr has entered in its wave 3. Wave 3 is typically 161.8% of waves 1 to 2, giving us a price target of $671 in the next 4 to 5 years, which translates into a 273% profit. Now, let's summarize. As we saw earlier, the current stock price offers excellent entry point. Nibble any pullbacks and accumulate corrections. I would recommend holding Fiverr stock for the next 4 to 5 years, as I expect a price target of $671, which translates into a profit of 273% in the next 4 to 5 years. What do you think of this analysis? Please leave me a comment and let me know. As always, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. Until then, bye-bye.